Good afternoon. Welcome to the Weekly Livestock Market Update. I'm Brownfield anchor reporter Megan Grebner. With us to talk all things market this week is University of Missouri Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Scott, as we take a look at the markets this week, let's talk about what happened and where numbers are and prices are sitting.
Yeah, so if we start on the cattle side of the equation, live fed cattle prices are basically unchanged this week, maybe just showing a little bit of strength. Yet those cash feeder cattle prices are $2 to $8 higher this week. Turning to the futures side of the equation, the live cattle February futures contract was up $1 this week. While we saw a lot of strength in feeder cattle futures this week, the February contract closed up nearly $3 on the week. That choice box beef price was virtually unchanged relative to a week ago, as we saw some weakness in rib prices that really offset some strength that we saw in other pieces of that choice box beef component add up. On the pork side of the equation, barrel and gut prices on the cash side were down nearly $1 this week, while the lean hog futures contract for February closed down $3. The pork cutout value was actually higher this week, up nearly $1 this week, driven in large part by what we saw in terms of strength in belly prices.
Scott, when we take a look at the future side of things, we saw some what could be deemed positive news coming out of the whole China trade discussion. As we take a look at that, was there maybe not, or is there concern that we're not going to see the anticipated buy or support back into the pork market from China, that we're not seeing it float a little bit higher?
I do think as we went through the week, there were some pessimism that came in terms of what was actually going to happen. From what we've been seeing with this China trade situation. It won't surprise me for us to flip back around and be more positive as well, but certainly reminds us of the volatility and just how quickly you could move those futures markets up and down depending on the news that we get out of China.
On the cash side of things, I think the pork market's seen a lot of pressure from just the sheer amount of pork that's coming online. We're in that seasonal high run for slaughter totals, and should the USDA not make any corrections to this week's numbers, we'll break 2.6 million head. How important is that for us to take note of these big slaughter runs on the pork side, but also on the beef side of things?
Yeah, so I don't think we can forget about what's happening there. You know, if you look at what's been happening in terms of weekly pork production as well, we've been at record levels. Likely we'll set another record with what we're doing this week. You take the combination of beef and pork, although we aren't talking about record beef production, the combination of beef and pork is in fact a record, and likely for 2 weeks in a row here, we've seen record beef plus pork production in the marketplace. That certainly weighs on where prices go, and equally could be part of the reason why we're seeing some weakness in hog prices this week as well.
As we take a look at numbers, there's really not a lot of reports for us to get into this week. I think the big one is WASDE, and that kind of sets us up for a discussion about 2019. What are some things that we're taking away from that report?
Yeah, I guess as I look at what USDA released with WASDE this week, so number one, I back up for a minute. So USDA gave us our first 2019 estimate all the way back in May of this year. For the outlook for 2019 for livestock markets. You compare that to where the December WASDE came out this week. To me, the interesting thing is we're talking about actually a slowdown in the growth of per capita availability of meat supplies, if you will, or per capita consumption. You know, we're down almost 2 pounds in this latest USDA report relative to May. Now, we're going to grow per capita consumption in 2019, but the rate of growth is slowing. It just reminds me to say exports have been strong. And if you look at what USDA has been doing from May of this year until December, they've been expanding net exports of things like beef and pork, which has helped curb the increase in per capita availability here in the United States. So that's good news, and we should be paying attention to that slower growth expected by USDA in 2019.
I think one of the interesting things as we take a look at these numbers, export-wise, especially on the pork side of things, with the whole tariff situation, while our value may not be increasing or holding on, our volume sure has done a really impressive job of holding on through this whole disruption and trade game.
Yeah, absolutely. I think it just reminds us that there are a number of countries and populations in the world that, as I've seen more money in their pockets, are certainly turning to meat protein, and we can benefit from that opportunity. And I think this whole trade disruption dispute, higher tariffs that we talk about, you kind of look back and go, what if we wouldn't have had those higher tariffs this year? Just how strong would 2018 have been? I think it's to the point of just how strong export demand has been for U.S. product, and even in the face of larger tariffs, we've done very well.
Scott, let's talk a little fair to finish returns as we take a look at those numbers for November. Not really a pretty sight.
It's not. When you look at what those Iowa State returns look like for November, they're actually suggesting a loss of $16.38 a head. That's now 4 consecutive months that series from Iowa State's been in the negative territory, and the 7th month in 2018 of negative returns. And I think if you look at December, given the kinds of runs of hogs that we've seen here, we're likely set for another negative month here for December as well. So now we've been more in the red ink than we've been so far, but it's certainly been a very different year for pork producers than what we came out of the previous 2 or 3.
Well, there's some not so great numbers that we're talking about in the fair to finish returns as we take a look at those retail prices for the month of November. It looks like there's still a pretty strong demand for beef, pork, and even some other proteins. Maybe not the other proteins as much.
Yeah. Well, so I think if you look at what we got out of retail price report this week, it is that in November, that choice retail beef price was 7 cents higher than it was in October. The pork retail price did move a little bit lower, down 2.6 cents. That chicken retail price was down 3.6 cents. So despite large runs, maybe we've held our own in things like pork is the way to look at that. But I sometimes like to back up and say, how much of these prices moved since where we were over that 2000 to 2009 period as a point of comparison. And, this is where we can talk about beef prices that are 35% higher, pork prices that are 25% higher, and even chicken higher, but only 11%. It kind of tells you what's been happening on that demand side of the picture for those 3 meats. And it really highlights that as consumers have looked at beef, the demand there has been much stronger with the kind of price increases that we see.
Does that even have, we talk about, I think the easiest comparison would be the economy. So we're in a much stronger or a stronger economic position today, but are we also, we've seen the investments in quality by producers to bring up the quality and make it more of a while it's a specialty product or a treat because it's so quality, but it's still even reasonable for folks to pick up at the grocery store.
Yeah, well, and I think this genetic change that's been taking place in the cattle industry will continue to unfold, number one, but has been important to what's been a changing quality and consistency of beef that's being put in front of consumers. And so really focusing on what consumers want has been important. Now, equally important, I think, is just what's been happening on the food service restaurant side of the equation. And I think that's where you find these menus that are focused on. It's much easier sitting here in Missouri to go find a place that's going to feature really good steak than it is to find a place that's going to focus on really good chicken. And so I think those menus tend to drive that demand as well. But the genetic improvement we've made in the herd that likely continues, that allows us to talk about higher quality beef, results in a more consistent eating experience for consumers, has certainly helped on the demand side.
Scott, as we wrap things up this week and take a look at next week, it's a doozy of a week for reports ahead of the Christmas holiday.
we have a blockbuster set of reports that hopefully put some presents under the Christmas tree, but we'll see what happens next week. We get livestock slaughter, we get hogs and pigs, we get cattle on feed and cold storage. So we'll have four big reports that will certainly set the stage as we start thinking about early 2019.
Plenty for us to talk about next Friday. Scott, have a great weekend. We will talk to you then to get into all of those presents, hopefully.
Yes, thanks, Megan.
All right. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, brownfieldagnews.com. You can click subscribe. You can also submit questions and comments there as well. And for market updates twice daily, make sure to check out John Parkin's Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.